Good day everyone, this is Suresh Kumar for Zebu School and Zebu on morning market update. As you would know, market has opened bit lower but not as low as SGX Nifty as suggested. The market is trading somewhere around 60 points down in Nifty, and the precious metals also bit down, and crude oil is down by 108 points as we speak. So it's kind of mixed market. Crude oil falling, it should be kind of negative, positive for the stock market, but didn't happen because there are a lot of overhang, as been telling earlier. There's a lot of overhang in the international market that is influencing our Indian market. Okay, let's see why Indian market is resilient when compared to other overseas market. As we are speaking, yesterday Nasdaq has hit 52-week low. It doesn't happen often. It happens only during recessions or in the extreme rare cases. It happened 52-week low was hit yesterday. Then, but Indian markets are very close to the highs. You take the case of Nifty. Nifty is somewhere around 17,300, whereas the high was 18,000, about 18,200. We are not too far away from the lifetime highs of Indian stock markets in the Nifty. So why is that Indian market alone? In fact, very few countries are resilient as Indian market is as we speak today. Why is it resilient? Because earlier the margining system allowed people to have too much leverage, and whenever there is a slight market correction or a fall by about 5% in any of the stocks or in the index itself, then there will be cascading liquidations that will, because of the leverage that is getting unwound, would push the market down. But here these days there are a lot of retail participation that is happening in our Indian markets, because of which, and also the SEBI has rightly curtailed the speculative tendency by having the margin restriction. So one can only leverage up to 4 times in cash market. So that has helped the market to be sane even in the face of all this serious downturn that is happening in the overseas market. And the second thing we could say that market right now, our Indian market is getting self-reliant. It's not even taking cues. Almost the earlier there used to be a correlation of about 99% and such between Indian market and other overseas market. Nowadays it is not so. There seems to be kind of decoupling that is happening between US markets as well as our markets, because there is an inherent demand. We have so much retail population that is coming in and buying every day, and these are not weak hands. So who sell at the first sign of trouble. These are the people who want to invest for the long term. So every dip that happens, people start buying in and they're pumping in money, and retail investment, they're doing it. So what happened with the FIAs? What did the FIAs do? Yesterday they sold about 2,139 crores worth of shares in the cash market, and to compensate for that, DIIs, our domestic institutional investors, they bought for almost a similar amount. Give or take 2 crores. So that much tandem buying and selling is happening in the market. So domestic institutional investors coming in and buying, it's also stabilizing the market. But how long that is going to stay that way, it is a tough question to ask, but keep watching it. We will do that. There is one good news. TCS has given a very good set of numbers. Their profit has gone up very well, and Infosys also seems to be doing well, because the ADR is up. American deposit receipt for this Infosys is up. That is one good thing. And Infosys planning to have a buyback. That also sends a strong signal of the company's belief in the company, as well as on the share price, saying that they think that it is kind of decently valued or undervalued. So worth watching out that particular space. The crude oil, as we said, it's continuing to fall. Sooner or later that will result in market going up. And why FIs keep selling our Indian markets is because when they do investments, they bring in dollars and then buy rupee and then buy it in the Indian markets. When they bought, it is somewhere around 70 to 75 rupees per dollar. Now it is 82. Even if the Indian markets are stable at say in Indian value, rupee terms, but in dollar terms it has depreciated much. So it doesn't give that great a return for the FIs who invested with the dollars. So that is the reason they want to take out the money at least in the short term and bring it and buy things in the dollar denominated assets and even the dollar itself, because on the signs of trouble people flock to dollars, which is right now is it appears to be the only stable asset class or even a currency at these times. So we are living in interesting interesting times. So keep watching for it. There are many twists and turns in the Indian stock markets. Keep watching this. We will help you navigate through all those twists and turns and help you becoming a good investor and a trader. Thank you. And for the trader, yes, it's still the sell and rise market, because all the things that negative things that keeping the market down is still there and it hasn't gone away. So please be watchful, please be vigilant, be light on your portion. This is Suresh Kumar signing off for Zebu and Zebu School. Have a good day. Thank you.